All right, okay, so attendee numbers seems to have stabilized, so we're gonna go ahead and get started. So hi again, everybody, and welcome to the Florida Bar Tax Section CLE on federal tax procedure. This is the first part of a two-part CLE designed to assist you with the tax board certification test. Part two is gonna be presented August 20th from 1 to 2. I'm sorry, from 12 to 1 p.m. Eastern. Sorry about that. Okay, so some announcements before we get started. We are looking for authors for the tax section bulletin. Articles should be between 500 and 1,000 words. If you're interested in publishing content, please contact Daniel Hudson, Justin Wallace, or Brittany Cobb. The 2025 tax section fall meeting is taking place October 23rd through 25th at the JW Marriott Clearwater Beach Resort and Spa, and room blocks have just become available. If you're interested, you can check out the blocks and more information on the meeting. It's all on our website, so you can find everything there. All right, so today's CLE code is 9235. Again, 9235. We are going to put the code in the chat and also announce it at the end of the presentation. The materials were emailed this morning to all participants, and we're also going to put it in the Q&A so you can have access to it. The CLE is being recorded, and you'll be able to find it in about a week on our YouTube channel, along with all of our other free CLEs. If you have any questions during the presentation, you can drop them in the Q&A and we will answer as we go along. All right, so I'm very pleased to introduce today's speaker, Karen Lapekas. Karen is board certified in tax law by the Florida Bar. She's a member of the American College of Tax Counsel, chairs the South Florida Tax Litigation Association, and teaches federal tax practice and procedure at the University of Miami School of Law as an adjunct professor. She's also a huge advocate of pro bono work and was recognized with the 2022 Janet Spraggins Pro Bono Award by the tax section of the American Bar Association. She's the pro bono coordinator for the Tax Court Calendar Call program through the Florida Bar Tax section and is the president of the board of directors for legal services of Greater Miami. Prior to starting Lapekas Law, Karen was a senior attorney with the IRS Office of Chief Counsel, where she was the lead attorney for the IRS on over 170 cases in the United States Tax Court. She conducted trials before at least 6 different tax court judges. As a former special assistant United States attorney, she also represented the United States interest in collection of tax liabilities in bankruptcy court. Okay, Karen, take it away.
Thanks, Bruna. Okay, I'm super excited to do this. And I hope that some of you taking this today are seriously considering applying and taking the board certification exam. The bad thing is it now covers every area of tax law, but the good thing is you really just need to know the basics about each area. So don't be intimidated. I know when I studied, I used all the resources from the Florida Bar Tax section, and it was enough. So you're going to be okay. Just, if you commit to it. So I'm going to try to keep that in mind today. We've split this up into 2 separate CLEs, 1 hour today, 1 hour in a couple weeks. And this is usually a course I teach over the course of like 25 to 30 hours at the LLM program. So it's a lot of information. So I've tried to get rid of all the stuff that I don't think you really need to know for the exam. And when I go through everything, I'm also going to try to point out what I don't think you need to know, but I just can't help myself. And I want to tell you anyway. So let me start sharing my slides. All right. The first thing we're going to go over, this is where I want to start. I'm going to try to always start with the big picture of what is tax procedure. I tell people all the time I don't really feel like a tax attorney at times because it's so procedural. This will be the least tax CLE you may ever take. It's procedure. So what does the IRS do? The IRS is either examining or it's collecting. And when you get a call from a client, you want to figure out what stage of the IRS they're in. So let's assume we're at the examination stage. What's an examination? Examination starts here. There's an examination. You get some information, document request, you go back and forth, revenue agent asks for information. You don't reach an agreement, or maybe you're close, they send a 30-day letter. What's this 30-day letter do? Well, this is what really scares people. They start calling their accountants, wanting to sue their accountants. Oh, the sky is falling. Relax. You've got options. One, after the 30-day letter, you could go to appeals. It's almost impossible to go to appeals now because there's hardly ever a year left on the statute of limitations on assessment. But you could go to appeals if you've got a year left on the statute. This is called, pre-docket appeals. All right, so you tell the revenue agent, hey, I don't agree with this. I want to appeal it. You file a protest. You go to your friendly IRS independent office of appeals and work with an appeals officer to try to resolve the matter. In any event, whether you go to appeals here or no, if you don't reach an agreement with the agent or the appeals office, you're going to get a notice of deficiency. That's what we're going to talk about today, that notice of deficiency. This is the thing you do not ignore. From that date, let's assume you're in the United States, you've got 90 days to, if you don't want to pay, file a petition in tax court. Say you don't want to go to tax court, you can pay, file a claim for refund. If you haven't already gone to appeals, you'll be able to appeal it to try to get to the right amount of tax. Hopefully you get the refund. If not, then you can appeal, you can file a suit for refund in the district court. All right, most people don't want to pay first. There are some reasons too, we'll talk about that later. The great thing about tax court is that you do not have to pay to litigate. Once you get a notice of deficiency, you can file a petition in tax court. The IRS attorney then will file an answer. If you have not already been to appeals, during the examination, they will automatically, usually, send it back to the appeals office to work with an appeals officer. This is where almost all litigated, docketed cases get resolved. Say you don't get it resolved with an appeals officer. Now you get to work with the IRS Office of Chief Counsel Attorney to try to resolve your case. You don't resolve it, you can engage in informal discovery, then formal discovery. Still don't reach a resolution, you get to go to trial in the district court. If you get an opinion you don't like in the district court, you can file an appeal in the Court of Appeals in the district where you resided when you first filed the petition in tax court. You don't like what you get in the Court of Appeals, you go to the Supreme Court. So that's the big picture. This is for examinations. All right, let's talk about the notice of deficiency. Let me see, this is too small. This is the notice of deficiency, again, is the document that's issued following an examination. It is not final unless you do nothing about it. You have options. What I tell everybody, unless, well, there's exceptions, of course, right? You always file a petition in tax court. What's interesting is the notice of deficiency, and we'll talk about some of the requirements that are supposed to be on it, is that it will instruct people to call the taxpayer advocate's office if they don't agree with it. And I think this is extremely misleading because a lot of people will think that they can resolve the issue without filing a petition in tax court. Sure, you still try, but you have to file a petition in tax court to truly preserve your rights. All right, so the notice of deficiency usually issued after audit, unless it's a no change. Those are great examinations as well. You realize there's no change, or maybe there's a refund due to your client. You do not get to go to appeals prior to the issuance of a notice of deficiency if there's not enough time left. Call it the ASED. We're going to have a bunch of acronyms. It's the assessment statute expiration date. If there's not enough time left, usually the revenue agent is going to ask you to file an agreement to extend the statute of limitations on assessment, the Form 872. You do not have to sign this, And if you refuse to sign it, it doesn't mean you're not being cooperative or not being a good taxpayer. It doesn't mean you're trying to hide anything, and it cannot be used against you. It's your option whether you agree to extend the statute of limitations. But if there's not enough time left in the statute, they'll say, well, the only way you're going to get to appeals is if you sign the statute of limitation extension on the extension on the statute of limitations. Not true, you say. I'll file a petition in tax court and I'll get to go to appeals thereafter. You can cite the Taxpayer First Act there. So what is the notice of deficiency? It gives you 90 days to file a petition in tax court. If it's addressed to someone outside the United States, 150 days. Usually on the notice itself, it'll tell you when you need to file the case in tax court by. Do not depend on that date. Calculate it yourself, file it early. Do not count on potential equitable tolling. Just file it as early as you can, and certainly within the 90 or 150 days.
Karen, we have a question.
Yeah.
The audience says, usually the client comes to the attorney tax professional after the 90-day expiration date. At that point, do you recommend a CDP hearing?
Oh my gosh. Yeah, this really stinks. So we'll talk. I'm going to keep that question in mind as we go along. Now you see, okay, did they receive the notice of deficiency in time? Do they agree with the amount on it? Was it sent to the last known address? So we'll think about all this stuff, because it's probably, if they come on the 91st day, you don't get to go to a CDP hearing right away. But there's going to be an argument of whether you had a prior opportunity to dispute the underlying liability. And usually, if you didn't file a petition in tax court, they will consider the underlying liability in a collection due process hearing. So all is not lost. You got collection due process hearing. You've got an offer in compromise, doubt as to liability. You can pay it and file a suit for refund. So there's options. That's something you always see on LinkedIn is people sharing that giant roadmap that was created by the taxpayer advocate that makes the IRS look really complicated. When I look at that, I see a bunch of opportunities. There's so many options, which is one of the beautiful things about working with the IRS, is that if one door closes, there's usually another avenue to resolve something. What's a deficiency? This is like tax procedure 101. It's not the amount that you owe. So I always want people to understand what a deficiency is, just so they sound smarter. Because if somebody calls and says, oh, my client has a deficiency of X, and it's really the balance that they owe us, it's different. So this is the statutory definition. But what is it? It's the difference between the amount that the taxpayer reported and the amount that the IRS has determined is owed. It's the difference. It's how was the tax return deficient? Let's think about the deficiencies in the tax return. The amount that you owe is almost always much more than the deficiency. So again, deficiency, the difference between what the taxpayer reported as their liability and the amount the IRS believes is the liability.
Karen, someone from the audience made a comment and said I was able to respond to the 90-day letter before and resolve the issue outside of tax court. Is this normal, or was I lucky to get an exception?
You're lucky. You're lucky. I would always try to resolve it, but do not count on it. Certainly do not blow the 90-day date. That's why I stress this, because a lot of people say, well, we've resolved it within 90 days, or we didn't need to do that. Fine, but you don't blow the statute. No matter what, on that 90th day, if you don't have something in writing, withdrawing that notice of deficiency, do not avoid tax court. And why do people avoid tax court? They're scared. And it should not be intimidating. Most of you are members of the tax section of the Florida Bar. If you know you need to file a petition in tax court, there's more than enough mentors here that are going to help you walk you through it. Apply to the tax court. You never know when you're going to need it. And the tax court website's extremely user-friendly. Yes, it's litigation, so people are scared. Do not be intimidated by it. Perhaps the only thing you may end up doing in tax court is filing a petition, because it's likely going to get resolved in appeals anyway. Okay. There's lots of requirements for notice of deficiency. I have never been able to argue, look, the notice of deficiency is inadequate, so it's invalid, unless it was sent to the, not sent to a last known address. So I'm going to skip over all this stuff because I've never seen a notice of deficiency invalidated. But what if you believe it is invalid? Well, it's one of those situations you might not want to file a petition on time, because then it would give the IRS time to fix it and file prepare a new notice of deficiency. So that's an extremely risky position that you could take. But you want to discuss it through with your clients if you want to take the position that a notice of deficiency was insufficient. Most likely this is going to come up if it wasn't mailed to your last known address. If you pay, make a payment before the notice of deficiency is issued, say during the audit, people are always worried about interest. Oh, I want to pay, I want to avoid interest. So they'll send in a check, say during the examination. Well, that payment extinguishes the deficiency and results in an automatic assessment. If you're going to do this, you need to make sure that the payment is designated as a deposit. Okay. What if a notice of deficiency is inadequate? Well, the risky thing with a notice of deficiency and filing a petition in tax court is that the IRS does have the opportunity to raise new issues. It usually doesn't. But filing a petition in tax court exposes your client to potential additional deficiency. Maybe there's an issue that the IRS didn't pick up in audit. The IRS could raise it in its answer and allege an increased deficiency. If it does, then the IRS bears the burden with respect to that new issue. But that's something to keep in mind. And while perhaps the notice of deficiency is wrong on some issues, maybe it didn't notice some other much larger issues, and it makes sense just to concede it or not file a petition. There's other ways to resolve the remaining issues after the statute of limitations has expired. Look, for the notice of deficiency, there's no specific form that has to be sent. That's the case with the IRS in general. You don't need a particular form, but we use them because it makes things easier. Again, there's newish case law out there that holds that some filing deadlines are non-jurisdictional, so they can be extended by equitable tolling. Don't depend on it. That's a Hail Mary argument in case of a really serious situation where a deadline was missed for really difficult, in difficult situations. Again, the notice of deficiency is supposed to say contact the taxpayer advocate to resolve something. I'd be surprised usually if you could resolve it within the amount of time before a notice of the petition is due, especially with the cuts to the taxpayer advocate's office. Last known address, this is going to come up a lot, not just with a notice of deficiency, but with other notices. Let me see, there's a job. So the IRS usually has an obligation to send notices, like a notice of deficiency, to the last known address. I trip people up on exam questions all the time on this. It does not have to be received by the taxpayer. This part's frustrating. whether they received it is relevant for other purposes, like whether they had an opportunity to dispute it. But for purposes of like filing the notice of the petition in tax court on time, they don't need to have received it in time. So the issuance of the notice of deficiency, that's what starts the 90 days, not the date that they receive it, the date that it's sent. So as a practice point, you always want to scan the envelope in which the notices and really any other letter you get from the IRS are received, because often the dates are not the same. The notice of deficiency may be stamped one date. The envelope may be stamped by the post office a couple days later. Sometimes that matters, especially when you get someone in your office on the 89th, 90th day. Look at the envelope. Maybe it was mailed a day or two later. Well, now you still have time to file a petition on time. Let's talk about what a last known address is. This is a term of art, lots of litigation over it, but generally it's the address that appears on the taxpayer's most recently filed and processed federal tax return, unless the IRS is giving clear and concise notification of a different address. Tax returns can take a long time to process now, especially during COVID. It was taking months and months. So you could update your address on the your tax return, but if the IRS hadn't processed it yet, that's not your last known address is what was shown on the last return that was filed and processed. The best way to update the IRS for a change of address is to file this form, certified mail receipt, this change of address form. Again, this specific form is not required. It's just recommended. Make it easy for the IRS to process this and for you to prove that you updated your address. You don't change your address by, when you hire a new representative by them putting a different address on the power of attorney. You don't update it on, require an application for extension of time to file your return. You don't update it by telling your employer and them issuing W-2s with your new address on it. It's not enough. I mean, the Internal Revenue Manual, the IRM, you're going to see that a lot in tax. The Internal Revenue Manual is like the employee manual for the IRS. If they're aware of more than one address and they're uncertain what's the last known address, they should send it to multiple addresses. Okay. So I'm not going to get into this. What is interesting though, it's not merely filing and processing the return, but under the revenue procedure of 2010-16 here, it's the processing plus 45 days. The IRS gets another 45 days to update the address. So just as soon as you move, file the change of address form. Imagine you could move today and your 25 return might not be due till October 15th. It could be, of 26, it could be until 2027 before the IRS updates your address based on your new next tax return. Even if the IRS doesn't send the notice of deficiency to your last known address, it doesn't mean it's not valid. It doesn't mean you still don't have to file a petition in tax court. Did you actually get it in time to file the petition in time? This is a classic exam topic. Say the IRS sends the notice of deficiency to one of your neighbors, and your nice neighbor walks it down to you, and you've got 20 days left, 20 days before the petition's due in tax court. Well, now you've got it, and now you better file the petition in time. There's lots of different cases on this, but so far 17 days left remaining on the statute has been deemed sufficient. I've got some examples in here. I'm going to skip through these. So again, the IRS's mailing of a deficiency notice to an address that's not the last known address is not necessarily fatal, as long as the taxpayer receives actual notice. and in time to file a petition. Look, here's an example of a petition. I often use the form available on the tax court website, especially for simple cases, because why not? It saves the client a lot of money. It's easy. Unfortunately, there's not much room to write anymore, but this is notice pleading in tax court. A lot of this stuff you do online now, and there's little question and answers. It's extremely easy to figure out how to file a tax court petition just using the tax court website. Deposits and prepayments. Remember, you can identify a payment as a deposit to stop the running of interest. All right, I am now going to move on. We've got 3 separate sections today, running a bit behind. Let's move on to part 2, litigation. There's all sorts of different types of tax litigation: deficiency actions, refund actions, TEFRA. There's some of those cases still outstanding, but most are the partnership or BBA now. Collection actions, miscellaneous, bankruptcy cases, criminal tax cases. The deficiency, the collection actions, the refund actions, this is the bread and butter of most tax cases. Overwhelming amount are deficiency actions. The IRS cannot assess a tax, well, there's exceptions, before sending a notice of deficiency. They must send the notice of deficiency before the statute of limitations on assessment expires. Okay. As soon as they send the notice of deficiency, it stops and it tolls the statute of limitations on assessment. Okay. The IRS then cannot assess the tax until the tax court decision is final. Interestingly, they can assess it after it's final and even when an appeal is pending. The tax court has limited jurisdiction, but it can generally redetermine all deficiencies: income tax, estate tax, gift tax. Just some terms of art in tax court: petitioner versus respondent. Petitioner, taxpayer; respondent is the commissioner of the Internal Revenue. Not the IRS, but the commissioner, the head of the IRS. So deficiency actions, think tax court. Well, what if that taxpayer didn't get the notice of deficiency in time, or they didn't file a petition in tax court in time? They can still file a claim for a refund and sue for a refund if they pay it. The problem with this is a lot of people don't have the funds to pay before they file a claim for refund. And most refund litigation requires a full payment of the amount in dispute. So how do you end up filing a suit for refund? You got to pay it, and you have to file a claim for refund. Claims for refund usually show up on tax returns, but let's say it's pursuant to an audit. You pay it and you can file a Form 843 request for a refund. Again, you don't necessarily need the specific form, but you use it anyway because it makes everybody's lives a bit easier. If the IRS denies it, then you have 2 years to file a suit for refund in the district court, federal district court. Or you can wait 6 months, because the IRS hardly ever now responds and denies or approves a refund claim within 6 months. But as soon as those 6 months have passed, you can file a suit for refund. Where can you file that suit? The Court of Federal Claims or the district court. There's pros and cons to filing in both. One of the cool things about the Court of Federal Claims, I just filed one the other day, is you don't have to serve the United States. The court does it for you. That's a nice, like, $40 savings. You've also got litigation and collection actions. These are those collection due process cases. Either the taxpayer is filing a suit following a collection due process hearing, or perhaps the IRS is trying to foreclose on a tax lien. We won't get into all of that. It's probably not going to be on the exam. We'll see. Okay, the miscellaneous stuff. Writs to enforce summonses. Those seem to be becoming more common, especially actions to enjoin income tax preparers or abusive shelter promoters.
Karen, we have
Yeah,
a
go ahead.
question. It says, does the tolling from a NOD stack for both audits and exams? For example, AUR issued a NOD followed months later by exams. Would this potentially add 180 days of tolling on the ASED?
I wish I could see the question, but the only way to toll the assessment statute is by agreeing to it. I don't know how there's a collection action before the amount's been assessed. That doesn't make sense to me. Let me see if I can see the question. No, I don't see the question. Yeah, maybe put it in the chat here so I can read it and I'll come back to it.
Okay.
Thanks. There's some very rarely litigation in bankruptcy. It's very hard to litigate tax in bankruptcy, especially if it's like a no asset case and the tax is inconsequential. So this is frustrating. This would come up in much larger cases. So does the tolling from a notice of deficiency stack for both audits and exams? Well, an audit is an exam. So the automated underreporter issued a notice of deficiency followed months later by exams. Oh, like there's two separate notices of deficiency in the same case. Wild. Wild, wild. Whoever wrote that, you should write an article for the Florida Bar tax section and discuss that because that's kind of cool. Huh. I would assume that that second one would still need to be before the original ASED. I don't know. Criminal tax cases. Yeah, that's another animal. Those are all in federal district court. Different burden. Of course, you got burden, like the government bears the burden, like in all criminal cases, beyond a reasonable doubt. In there's criminal tax procedures apply there. I don't touch them. Now let's talk about tax court. Tax court, there's no jury, bench trials only. It's a court of limited jurisdiction. So this can be frustrating for people. It's not always easy to get into tax court. I post a lot on LinkedIn, and a lot of people like to say, go to tax court. It's like, oh, if if it were only that easy. It's not that easy to get there. You've got to generally notice a deficiency, notice of determination. You've got to have some kind of notice that triggers your right to get there. So again, the majority of the cases in tax court are deficiency cases. They're coming from examination. You got somebody whose passport, they need to get their passport renewed and can't because they were determined to have seriously delinquent tax debt. File a petition in tax court to get that resolved. Collection due process cases and whistleblower reward litigation happens in tax court also. How do you enter appearance in tax court? Just like other courts, that initial filing of the petition, that's your notice of appearance. If you come in later, you can file a notice of appearance. You can also file a limited appearance. This happens a lot in pro bono cases. Say you just want to be able to represent someone, say a calendar call or just during the trial, but you don't want to be on the hook for filing a brief. You'll file a notice of limited appearance, either by time or by task, say, just for calendar call, you're representing somebody. Because once you're in for either, you have to, file a withdrawal, but it's much harder to get out of a tax court case if you file a general notice of appearance. In tax court, the respondent, the commissioner of the IRS, is represented by IRF chief counsel attorneys. In district court, it's the Department of Justice attorneys. The IRS chief counsel attorneys are usually local. The DOJ attorneys, whenever there's something in person, a trial, a hearing, they're flying down from DC. Tax court, their rules are available on the tax court website. They have their own rules of procedure. Where you can't find one that fits your situation, you can look to the federal rules of civil procedure. If you have any questions too, pick up the phone and call the clerk. Extremely friendly, and have been helpful in situations where you just think there's no answer out there. They can provide some insight or poke the judge and perhaps schedule a conference call to help resolve an issue. They apply the federal rules of evidence that are applied in all other federal courts, but we'll talk about that too, because in S cases, these rules are relaxed. Filing a petition, again, it's notice pleading. It doesn't have to be perfect. It just has to put the IRS on notice of the matters that are being contested. So the question is, did it fairly advise the IRS of the matters being contested? $60 filing fee unless you want to file for a waiver. For cases where there's generally $50,000 or less in dispute, you can elect to conduct the case under small tax case procedures. We'll get into that in just a second. The court serves the petition on the IRS, so all you have to do is file a petition. You can do it electronically now, get confirmation immediately, access the docket thereafter online. So the court serves the IRS. They have 60 days to file an answer. And if they assert any new matters or assert a matter on which they have a burden of proof, like the fraud penalty, you have to file a reply. So keep your eye out for that. Check the answer to see if they raise anything new so you know whether you need to file a reply. Generally, after you file the petition, everything's got to be filed electronically, but you all are going to file everything electronically anyway. If you haven't already had the opportunity to go to appeals, almost always the IRS attorney is going to send the case to appeals, and your first contact on the case is going to be from that appeals officer. You may never work with the IRS attorney because even if you resolve it with the appeals, they're going to be the ones that often draft the decision document with the approval of the IRS attorney, and that's it. Small tax cases. Most of the people that elect the small tax case procedures are pro se, and they can elect that if at issue is less than $50,000 per year. That's per year. And that's tax plus penalties. It doesn't include interest. If you want to get under that threshold, you can concede some amount if it's that important to you. It's good for pro se taxpayers because the federal rules of evidence are relaxed. You don't have to do opening arguments. There's generally no briefs. The court generally rules from the bench. The caveat is that the decision is non-appealable. So that's it. So that's why I'm very cautious about choosing an S election, because that's it. You don't like the result, you think it's wrong, you're stuck with it. Generally, you request it when you file a petition. You can ask it later. I've seen people show up on calendar call and switch between elections, just asking the court to, they didn't realize they selected S and don't want S. It's pretty easy to go back and forth. And in a small tax case, generally anything with probative value gets in. You'll even see the judges asking questions of the taxpayer themselves. It's extremely relaxed. Standards of review. This is something that probably comes up. So you've got two different standards of review in tax court. de novo and abuse of discretion. When it's de novo, the court's looking at everything fresh, not deferring to the IRS's decisions at all. So there's no deference to the IRS, and this applies in deficiency cases. Generally, just think if the amount at issue, if the amount of the liability is in dispute, de novo. So when does abuse of discretion come in? That's when it applies to collection due process cases where the liability is not at issue. So the court looks, did the appeals officer, settlement officer abuse its discretion when they upheld the levy, when they determined that the lien was properly filed? And that's it. They're extremely hard to overcome. You can, but it's harder. In deficiency cases, think audit cases, the burden's generally on the taxpayer, the petitioner, except for the fraud penalty. If the IRS is asserting fraud, then the government has the burden. A notice of deficiency is presumed correct. So the IRS doesn't need to get up there and prove that it's right. The taxpayer needs to prove that the IRS is wrong. There's situations where the burden can shift to the respondent. This stuff's not going to come up on the exam, but just know it exists. And when I teach this stuff, I tell all my students, I don't expect them to remember it. I just want them to have heard it so they know it triggers something later. And it tells them, I need to look into this. I think maybe I need to look into burden shifting. Has that happened now? So this is one of those things. You just want you to know that it's out there. This comes up all the time. And this question where, say somebody files a W-2 or a 1099 and you didn't receive that income. Maybe you're a victim of identity theft or whatever. Somebody files the same W-2 twice. That happens. The burden easily shifts to the IRS to prove that you received that income. So you see, yeah, because I don't read this. Let me go over that. Now I don't have the statute section. But generally in those cases, you just have to raise a reasonable dispute and the burden shifts to the IRS to prove that you received the income. You've got to cooperate with the IRS in the proceeding. But if you do those things, then the IRS has to prove you had the income, you got the income. So those can be fairly easily resolved. Discovery in tax court. Basically, what you need to know is that you have to start informally. You have to start by trying to get things from each other nicely, generally through a Brannerton letter. Formal discovery is pretty rare, but I suspect it's happening more often now with everyone's caseloads getting busier. There are, you can send interrogatories, certain situations, get depositions, requests for productions, all the kind of things that you see in district court litigation. Not as common in tax court, except in like the larger cases, but it exists. Just know that you have to try to get everything nicely first through informal discovery. Can be a phone call. Generally it's something called a Brannerton letter. But you don't have to call it anything. Just send them a letter and let them know the items that you want. And that's the requirement before you enter into formal discovery with the IRS. You have to have tried to obtain the information through informal discovery. Scope is broad, anything that's not privileged and which is relevant to the subject matter involved. What's the difference? Tax court or district court? Tax court, the jurisdiction is more limited. You've got reviews of deficiencies, those notice of deficiencies, the notice of determinations that you get from a CDP following a CDP hearing, denials of joint and several liability relief requests, innocent spouse relief requests. Again, there's no juries. And in district court, there's not necessarily, you don't get juries in every single case either. refund cases, yes, but you have to look up, if there's any kind of other issue to see whether you're entitled to a jury trial. Tax court, you don't have to pay to play. It's pre-payment jurisdiction. Interest runs, though, from the due date of the return. After the notice of deficiency, remember we talked about that problem if you pay before and don't designate it as a deposit, it's considered kind of like a concession. They'll assess it as the deficiency and you don't get the notice of deficiency. Well, if after the notice of deficiency, you can pay and you still have tax court jurisdiction, it's still designated as the deposit. District court, if you want to dispute a deficiency, you have to prepay, unless it's in a defense to something like a collection action in district court that the IRS is bringing, the United States is bringing. Talk about refund suits. Generally, before filing a suit for refund, you have to fully pay the tax, penalty, and interest.
Karen, sorry,
yeah.
there's a question before we go further. It
Yeah.
says, can the petitioner send an informal request for discovery to a third party?
I mean, you can ask anybody for anything, but if you want some teeth on it, you can ask the court to issue a summons or subpoena. I always mix up the two, and the rules for that are on the tax court website. There's a procedure for issuing those prior to the date of trial. But of course, nothing's stopping you from contacting any potential witnesses or anybody that potentially has problems. But if you want to kind of give some legal requirements to them providing it, you can get the court involved. So generally, the problem with the refund suit is you have to pay it all and file a claim for refund and then a suit for refund. In cases in the Court of Federal Claims, they've mitigated that full payment rule. You could pay only the amount that you dispute. So if you're not disputing the penalties, but only the underlying liability, you could just pay the underlying liability. So that's a big benefit. Because if the underlying liability goes, the penalties will go automatically as well. This is the big thing. Watch out for counterclaims. And this is one of the reasons why you might want to not file a petition in tax court and later have the client pay and sue for a refund, because then a counterclaim would generally be limited to the amount that the taxpayer is claiming. But if the assessment statute is still open, the government could use that refund suit to say, not only do we not owe you a refund, but you owe us more money. So that's why you always have to be cognizant of the assessment statute. And we'll talk about the collection statute of limitations and the refund statute of limitations. This is super helpful to know, the prepayment, the mitigation rules for estate tax. That's commonly known against people that deal with probate, that there's some relief for refund, some mitigation. They don't have to pay the whole thing. Promoters, this is something that not many people are aware of, but these promoters can get some pretty hefty penalties. And they can pay 15% and sue for a refund, only 15%. The catch, the statute of limitations on that, for filing a suit in district court, I think is only 7 months. Some practitioners just automatically assume it's 2 years, and that can really trip you up. And you know how you read the notice from the IRS. It says so much. That's usually your answers are in the notice received, like notice of deficiency, notice of determination. It tells you usually tells you the deadlines and what you need to do. Refund suits, you can ask for a jury. The IRS always has the option to set off the tax. So even if the IRS owes you a refund. Say you win a suit for refund for the tax year 2023, but you owe for 2022. Great. The IRS gives you the refund, but does so by setting it off and applying it to 2022. The IRS has the right to do that. The venue, where can you file a suit for refund? In the district where the taxpayer resides. And that's a district court. So you want to represent somebody that doesn't reside in your district or where you're admitted, you can file a suit in the Court of Federal Claims. Same for non-resident aliens, you got to bring suit in the Court of Federal Claims. They're a bit more relaxed as well. I guess they're more informal like the tax court. I haven't actually had a trial in the Court of Federal Claims, just cases that are resolved outside of it. So I personally can't say how a trial would go, but okay, let's see. Let's move on. Oh my gosh. Anything I don't cover today, I'm going to try to cover in the next one because I want to get to assessment and collection quickly. What's an assessment? It's the formal recording of the taxpayer's liability. So there's a balance due, there's an assessed amount, there's a deficiency. All these three numbers are almost never the same. So when you look at an account transcript, you're going to see the amount that's assessed and you're going to see a balance due. The balance due is larger. So what's an assessment? So something like penalties and interest, those things are constantly accruing. But when the IRS formally enters that amount into its whatever systems, then it becomes an assessment. So the assessed balance is generally lower than the balance due. Over time, it's all going to end up getting assessed, but that's just a technical thing to keep aware of. That assessment date's super important. So when you get a new client and say they have a balance due, you need to know, one, do they agree with it? Is it from a tax return they filed? Is it from a notice in examination? Do they agree with the amount? Was it assessed on time? Pull up account transcripts. Did the IRS assess on time? If it was later, were there agreements to assess later? Is there anything that told the statute of limitations on assessment? And then, so you've got the assessment date. Make sure the IRS assessed it in time. And then you look at the collection statute. Did the IRS collect the tax on time? If you want to file a suit for refund or claim for refund, are you within the refund statute of limitations? So these three dates always need to be in your mind when you're trying to resolve something. Okay. So there's exceptions to the IRS having to provide a notice of deficiency before assessment. With mathematical errors, like computational adjustments, the IRS will send you a notice saying, hey, we noticed this error. It's a mathematical error. If you don't respond within 60 days, we're going to assess it. If you respond and dispute it within 60 days, they're supposed to issue a notice of deficiency before they assess it. I think there's some problems with the procedures or whatever's going on behind the curtain. A lot of times they assess it anyway. But anyways, they're not supposed to. They're supposed to issue notice of deficiency. They all don't have to provide a notice of deficiency if you sign a waiver, like with the revenue agent. Okay, we agree with the adjustments, we sign it. They're not going to send a notice of deficiency. Or jeopardy or termination assessments. All right, so collection starts with the assessment. The assessment is not necessarily the date that you process that you file the return. You can file a return today. It might not get assessed for days, months later. But that assessment date, maybe days, months later, is what starts the statute of limitations on collections. You can't say, hey, IRS, you should have processed the return a month earlier, so the statute of limitations should have run a month before you say it did. as soon, like the IRS is required to send a notice of assessment. It's like a demand letter within 60 days of assessment. Almost always they do it that's at the time that they process the return. So that's how you're going to know how a return has been processed. You get one of these notices of assessment and demand if you haven't paid the tax. And so, and what if the IRS never issues it? I guess I always look to see if they did, but now it's automatic. They almost always do. Um, no harm, no foul, but even if there is harm, I guess no foul because it hasn't been used against the IRS. We're not issuing those, but just know you've got that argument. So the IRS is required to send you notice of assessment demand within 60 days of assessment. What happens after that? And this notice just has to be sent to the last known address. It doesn't have to be received. What happens after that? Well, that first notice is you have to pay within 10 days. This is when people get really scared. Oh my God, I can't pay by that day. All right, nothing's going to happen. Things could happen, but you're going to get several more notices before you've really got to do something. So you're going to get a series of notices, maybe 3 notices before the final one. Lately, there's a lot of notices out there that say notice of intent to levy, which are scary, but they only give you collection appeal program rights, which are not that, I don't have a lot of confidence in those. But it doesn't give the IRS the right to start levying bank accounts, for example. You need to look for that final notice of intent to levy that gives you collection due process hearing rights. All right, let me see where I should stop. Oh, a tax lien. People always ask, do I have a tax lien? You have to go, well, what do you mean? Technically, there is always a lien. There's an assessment lien. It's also called a secret lien, and you don't need to be noticed of it. It's not a notice of tax lien filing. That's what gets filed in the public records. So the answer is almost always yes, there's a tax lien, but not the kind that you're thinking of. People are worried about the one in the public records, and those are effective against third parties. So just FYI. So how does a tax lien arise? Someone's liable. The tax gets assessed. The IRS issues that notice and demand that, hey, you owe this much and you don't pay. After 10 days, this secret lien arises. All right, I will stop there. I'll note slide 14. I'll be around for questions, the next 15 minutes. But otherwise, thank you, and I will see you in a couple weeks for part 2.
Okay, thank you, Karen. Thanks, everyone. Again, the course number, CLE code is 9235, 9235. Thank you again, Karen, so much. And the part 2, again, is going to be August 20th from 12 to 1 Eastern.